Happy Thursday, Stocks on the Rocks. Good evening, everyone. Let's get the music on out of here. And Ian, what's up? Good to see you. This is Stocks on the Rocks. For those of you joining us live, welcome. It's great to see you guys here. If you're watching back on recording, also appreciate the watch. And we got a few more people coming in from the waiting room. I'm recognizing that we have some people in here that are not Traders Army members. So it's great to see you guys here. Appreciate you showing up. This is something we do every other week, just to kind of casually hang out, answer questions, have open office hours, share ideas, all that super fun stuff. Pour a cocktail if you want. You don't have to if you don't want to, but I'm going to. And it's a happy hour, right? So it's 5 o'clock on the West Coast, 8 o'clock on the East Coast. This session is designed to go anywhere between 5 minutes and 1 hour, and is designed to basically be at your beck and call. Whatever you guys want to talk about, let's talk about it. Challenges, successes, screw ups, you name it. We don't even have to talk about trading. We can talk about whatever you guys want to, but this is a Traders Army, Stocks on the Rocks. And so mostly it'll be about trading. If you want to share your screen, share some charts with us, you're certainly welcome to do that. I would be very happy. Omid, I got your hand up. I'll see you. You got first question coming up in here. Because we have this open to the general public, all I ask is that you be respectful. Let's be adults. Let's not get weird. And let's not ruin it for the rest of us, right? So it's great to see you guys here. I appreciate you joining. So with that being said, again, I come planned with nothing to talk about. We have trading rooms. We have 8 trading rooms a week. We do them 6 days a week, and we come planned with trades and all kinds of stuff that we, pre-plan as mentors and instructors here. But this is the time where we don't have anything pre-planned. So we just talk about whatever you guys want to talk about. So bring it up and we'll talk about it. That being said, Omid, you got your mic ready?
Yes. Hi, how are you? Good evening, everyone.
What's up, buddy? Your mic always sounds like really professional. Are you like a radio DJ in your spare
No,
time?
I'm using my MacBook.
Really?
Yeah.
Just your MacBook, right? That's awesome. Sounds good. Sounds
Yeah.
good. All right, man.
I can always come up with ideas and questions. So, I posted a question today in the chat box, but we didn't have time to go through it. So, Corey, with our wealth essential, we are selling naked put, and I was thinking why, or if you have ever looked into, selling covered calls, especially for those stocks that have a dividends upcoming to kind of, I mean, enhance the return, and what are the pros and cons of that?
So, I do sell covered calls. I
Yeah,
don't
we do
own
that
a lot.
only after we have been assigned shares. But I'm
Yeah.
saying even before that, it's kind of the same thing, but sometimes if there is a good dividends, we could technically capture that dividends.
So when you say sell covered calls, I thought I saw the question this morning, and that's the question you deleted and you yanked back, correct?
No, that was a different question.
Oh,
Yeah.
so would you be referring to, so I'm going to ask a couple of questions here and then I'll get to the answer. So would you be referring to selling an out of the money call? So buy the stock, sell an out of the money call, or buy the stock and sell an in the money call? What would you be referring to
Selling in the money call.
in the money? So if you think about what selling an in the money call is, I mean, you've already got potential assignment risk immediately, right? Because it's already in the money. This probably not going to happen, depending upon how in the money it is and how close to expiration it is. However, a dividend, upcoming dividend, is actually a very reasonable trigger for someone to actually early exercise the options that you sold. Because if they can exercise their option, which has a little bit of extrinsic value they would be throwing away, but they throw that extrinsic value away, give it to you, take your stock, and then they get to keep the dividend, not you. So I'm not quite sure how you would benefit from both owning the stock, selling the call, and getting the dividend, unless the option was out of the money and the option's extrinsic value was worth less than the dividend would pay them by exercising that option early. Does that make sense, Omid?
Oh yeah, that makes sense. Yeah.
Right. So I love selling covered calls, and they're generally going to be out of the money for me. And, if you've got an option that's out of the money by, let's just say it's out of the money by $1, and the extrinsic value is all of $1, but the dividend is paying $2. It might actually be worth it for the person who owns that call option to exercise their rights, buy our stock, throw away that dollar worth of extrinsic value in order to get the $2 dividend. And that would be a scenario where the dividend is larger than the extrinsic value. So I always get these notices for Interactive Brokers. I don't get them at all from Thinkorswim and Schwab, but I get them at Interactive Brokers on shares that we own, maybe calls that we've sold. We've got covered calls on them. And I always get these warnings like, hey, there's a dividend coming up. And they actually tell you the likelihood of you getting assigned on your short call in order to help you better manage risk or reward potential or assignment risk if you want to go into it. So that'd be the only thing I would think about. I don't think you would get both. You wouldn't get both the option premium and the dividend unless the dividend was smaller than the extrinsic value and the option was out of the money. Make sense?
Yeah, thanks.
Yeah, man, my pleasure. And if there's something else that you have a question about that I might not be answering or missing on that topic, then follow-up questions are always welcome for sure. Greg says current. So I'm watching the chat box too, but if you guys want to use your microphone, this is let's do that, right? Greg says current trading conditions in the market is super challenging due to sideways pricing and no volume. How has that changed your trading style recently? So, I'm going to share my screen. I stopped sharing, thinking that one of you guys might want to share it, and I can always transfer that over if you guys want. You guys should be able to see my Thinkorswim, correct? I think. Okay. So, you look at something like, the SPY, for instance, and the first thing that I want to just kind of think about here is the first part of your question. Super challenging due to sideways pricing and no volume. Now, maybe you're talking about a different market or a different index or stocks or specific stocks, but the indexes are marching higher relentlessly, right? So there is a very decisive bullish. Yeah, it's a slow grind. I would say slow grind for some stocks, but if you look at the S&P, just in the last, what is this? Since this last little pullback that we got in early to, let's call it mid-June, the market has rallied 6% almost. And then we've only had, what, 2 days, 3 days, this little guy right here, which is basically a sideways candle. The market tried to pull back earlier this week on Monday, but that was canceled due to lack of interest. And now we're starting to pick up, moving to the upside again. So they're not gigantic candles, like they're not big green bars. Like I would say this 623 bar is a big green bar. The 6.2 bar is a big green bar. So, we had a gap up, going just before the 4th of July holiday weekend. So we're definitely in an upward trend. And but not all stocks are, right? Some stocks are just kind of parking themselves. I've got some of those from the trading rooms, and they're starting to move now. But there was definitely a few weeks there where I was like, man, the market's moving higher, but these stocks are going nowhere. So that's a little bit frustrating, but that's always going to be the case. You're going to have some stocks that go down when the market goes up. You're going to have some stocks that go sideways when the market goes up, and vice versa, right? But as far as the volume is concerned, also, this is something I was looking at this morning, and you were in the room, I think, this morning, Greg, our option trading room, and just looking at SPY. So just kind of using this as the example from a volume standpoint. We're a little lower than average in terms of volume, but it's not that's not like it's an uncommon thing. We have periods of very high volume, back, for instance, in early April when we had this capitulation and the volume was through the roof out of, fear the market was going to go lower, but then banks stepped in and said, we're buying, sucker. So it's not abnormally low. It's just average. So I would say, to follow up with the last part of your question, how's that change your trading style? What's interesting is for a while, I mean, as you know, being in my trading rooms every week, I love option selling. I love the fact that, we can sell put spreads, call spreads, naked puts, cash secured puts, covered call, whatever it is. I love selling options because you don't have to be directionally right. You don't have to be, the stock could go nowhere. The stock could go the wrong way a little bit. And I really like that style of trading. It's less stressful. It's got a higher probability of a profitable outcome. But you make a limited amount of money, as we know, and then a lot of times you have asymmetric risk where the risk is actually higher than the reward potential. So that part's not great, but the probability of success is actually higher. So I still like doing that, but I've actually found, if I look at my current portfolio, just in my trading room trades, I've got 1, 2, 3, 4, 5, 6, 7, 8 directional trades, right? So bull call spreads, long calls, call ratio back spreads, where I actually need the market to move in my favor. And I would say, yeah, there's a couple in there that are being challenged right now, but for the most part, a lot of the directional trades are actually working out well. And the non-directional trades are working out well too. I do have some pretty good, you know, bull put spreads. I will say the one negative delta position we threw on last week in XBI, which is the biotech ETF, I thought, it's coming into supply. Let's go ahead and sell a bear call spread and try to get a little bit bearish, add some negative delta here. And boy, it was only a couple days before that thing got stopped out. So overall, my outlook is still bullish. I would say moderately bullish. I am only cautious because there's still so much uncertainty around the tariffs. That's it. It's the only reason I'm cautious. Otherwise, I think this market is as strong as it's ever been. And volumes average. Prices seem to, gap almost every day in the SPY, not necessarily in the futures, obviously, but yeah, I think I'm cautious because of the tariffs, but otherwise I'm actually trying to take more advantage than I usually do of these directional moves by having more directional trades on versus non-directional. And that goes for, by the way, for those of you who are invested in our hedge fund, that goes for the hedge fund as well, which is actually proving to be a very asymmetric reward to risk, which is working out really well, knock wood, I guess, for overall fund performance and risk mitigation, because those are very defined risk with 2 to 3 times or more reward potential. So that's been working out really well for the fund as well as, my own personal accounts as well. Make sense, Greg? Any follow-up questions to that? All right. Mark, you had your question. You had your hand raised, and then Omid, I'll come back to your question here in a second. Mark had his hand raised first. Cool. Awesome. Great. Thank you.
Yeah, Corey, thanks a lot. Yeah, remember we got into a trade on ENVX. It was a call spread, $8 to $10. for about 41 cent debit on the thing, and it closed a little bit in the money. So the short went away, um, and I ended up getting stuck with the call. Um, um, and I think I got it for like $8, and it was selling for 7.80 when I got up Monday morning after it closed. So anyhow, halfway through the morning it was already up to like 5.25 or 5.40, something like that. And so I decided to keep it and sell a call on it, which I did, a $9 call, which
Okay.
seems a little tight. But anyhow, I got 38 cents for that. The Anyhow, a couple days later, the thing jumped all the way up to $11 or 11 and a half, something like that. Um,
Yeah.
and I was doing great on the stock, and I was hurting on the covered call. So I ended up buying the covered call back, losing like $1.50 or something on it.
Okay.
Just to buy it back, which I'm glad I did, because the thing has continued to accelerate. It's a
Sure.
real winner out there.
Yeah.
Um, and But what's the right tactic to use on a covered call? I'm thinking, maybe whatever you got for it, just figure on getting out if it costs you double that or triple that, somewhere in that range, where it's not real painful. What do you think about that?
You mean as far as like buying the call back and keeping the stock? Is that the main
Yes,
question?
exactly.
Yeah. I mean, it really depends. It's not so much for me about how much I have to buy the call back for. It's, do I think the stock is actually going to continue to rise, beyond any sort of resistance or supply. So, um, once you get deep enough in the money, and that short call is deep enough in the money, it may not even make sense to buy it back, because what you're losing on the short call, yes, you're making it on the long stock, but you basically have now this neutral delta. So, I'm going to ask you for one thing really quickly here, and that is, let's just say you owned 100 shares, right?
Yeah.
And you bought it for, did you say 10 or 12?
Uh, it was handed to me for $8.
$8.
Yeah.
Okay. And then you sold
I sold a $9 covered call.
on what expiration? Was it July 18?
It's, let me see. Hold on. Um,
I'm going to recreate your position
yeah,
here.
July 18th, correct.
Okay. And then that was a $9 call. And you sold that, you said for 38 cents, right?
Right.
Right. And that was probably back on what expiration was that? That was a June 20th,
Uh,
so that would have been.
um, yeah, I bought it on 6/23, which I think was that Monday morning.
Mm-hmm. Yep.
Um,
So then you immediately sold the covered call, correct?
right.
Okay. So you go back to that. I can't really recreate the entire thing perfectly. But essentially, if we were to do the same thing today, right, with today's prices, but I can't go back in time on the option market. And let's say you bought it for 12 and you sold the 13s. And that was in August. So you've got this slope, this real-time risk profile that says, as long as the stock is going up, 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 you're continuing to make money, but your net delta between what you own in stock and what you're short in calls is going to start to taper off, and eventually you get to this max profit, right? So,
Right.
so I would say if the stock jumps in such a big way that you get to this max profit standpoint, I actually don't know that that's worth it to buy back the call or just let everything get called away, because you're pretty much at max profit. And why I say that is you run the risk of buying the calls back for a significant loss, which you've made that money unrealized profit. You've made that money in your long stock, but you're realizing the loss buying back your short call, right?
Right.
So So what you're risking is you buy back the short call for that realized loss, and then the stock drops back down again. And then all that unrealized profit you made to offset your losses in the long call and in the short call are now getting taken back. And so I would prefer, if you're going to roll it or buy the call back, roll it up, buy the call back, roll it up, I would prefer to do it when we're still kind of not that far away from the short strike. So similar to when you sell puts, right? When you sell puts, when is the best time if you were trying to not get put the shares and not get upside down on delta and gamma? When would be the best time to buy back those puts and roll them out? It would be
close to the expiration.
close to expiration, but in terms of close to price or far away from price, out of the money, in the money, or at the money, it would be pretty much at the money. At
Right.
the money, you've got your highest gamma, which is now going to start to accelerate delta if price goes in the money. Now, I'm okay waiting to see how, what the stock does close to expiration. So close to expiration is my, favorite time to manage risk. But I also know that that option could be deep in the money and I might get stuck with the shares. And so closer to expiration is better, number one. Number two, if you're trying to roll an option up and out or down and out in the case of puts, the best place to do it is going to be when the stock is pretty much at the money. Because as soon as, let me uncheck this stock here, as soon as the stock, in your case, your short a call, goes above your short call, your gamma is going to accelerate your delta, and your delta is what's going to cost you a bunch of money on that short call. So the longer you take to buy it back, the more you're going to hurt your long stock profits. So if you have intentions of, oh my gosh, I was going to sell the nines and I'm okay getting called out at 9, and then it goes above 9 and then it goes above 10, like I want to quickly buy that back and roll it up, or buy it back and not do anything, just be long the stock. The challenge is if you let it go too far in the money, now it's just like, well, everything I'm losing on the option, the call option buying it back, yes, I've made it on the stock, but now I'm risking, but now your break even on the stock is a lot higher, right? So now you're risking giving that stock profit back.
Right.
Right. So I prefer to do it as it's kind of going. First of all, I would want to know probably ahead of time that if the stock went in, if the option went in the money, I'd want to know ahead of time that I don't want to lose the stock. And I just want to buy that call option back and maybe sell a higher call. Roll it up, roll it out, try to collect what you lost on the next call, just like we do when we roll down and out when we sell puts. Does that make sense?
It does. Yeah. My problem was by the time I was aware of what was going on, the thing was already at about 10.50. So I was $1.50
Yeah.
above my
Yeah.
strike. It was really painful at that point. So
Yeah.
I'm
Now,
just I'm just looking for, basically doing what you're saying, if you can get out at around your strike price, but also maybe put in some kind of extra protection in case it catches you by surprise, gaps up massively or something,
yeah.
take a loss of 2 or 3 times the premium that you got for it.
That, but also don't forget, like, if you got 38 cents for a $9 call, you got, what is that, 4.5, almost 4.5% on the long call. I mean, on the short call in terms of premium.
Yeah.
And that's return on your cost basis of $8. That all by itself is not terrible for 1 month, right?
Right.
So, like anytime I sell a call option, I say probably 9 times out of 10, I'm like, if I get called out, I get called out. And I don't care what happens if the stock goes up after, if it goes up during. Yeah, I look back at it and say, oh, maybe I shouldn't have sold that call. But then I remind myself that I got some, like you get $1, like in your case, you would have gotten $1 worth of equity plus 4% in option premium. That's not a terrible outcome. And I know that it feels like, yeah, but I missed out on all this. I agree with you, but I would also say, okay, that's fair, but also look at the 16,000 other stocks that you didn't make money on and they rallied.
Yeah.
You know what I mean? So it's just like,
Yep.
so I'm actually generally gonna choose a strike price where I don't actually care if I get called out and the stock rips higher, primarily because I don't think the stock is going to rip that high. So if you got in when the stock was, let's say you got in at 8, and let's see, I got to look at what date was
Yep.
the
That's what I
23rd.
did. Yeah.
Yes, yeah. So you're like basically you got in right here.
Right.
So basically, like the nines are paying the most premium, but they're also really close. So what you're saying is I'm asking to get called out almost,
Mm-hmm.
right?
Mm-hmm.
So if you're asking to get called out, let yourself get called out. Or I would also take a quick look and I'd say, okay, well, where is the nearest resistance or supply? Can I get any premium for selling the 11s or 12s? And I'd actually be perfectly fine getting called out there.
Uh-huh.
You know what
Yeah,
I mean?
I pulled it too close with the nines. That was the
It's a little close. It's a little
problem.
close, but it happens.
Yeah. Okay. Thanks a lot.
Yeah, man. Yeah, my pleasure. Omid says, well, first of all, he says, what's happening with futures right now? Yeah, Dow's down 225. Did that just happen? Let's see, 5 minute.
Yes.
Yeah, wow. Yeah, that's just happened like out of nowhere. I don't know.
News regarding Canada, I guess.
Is that what it is? Tariff news? Usually the news doesn't come up very quickly. Unfortunately. Let's see. Future steady. Yeah, but this is not. Let's see if anything comes up. SPY stocks. Oh, there's Forex back to about 35% tariff on goods from something.
Yeah,
Yeah,
so
there's
last 5 minutes.
last 5 minutes.
Yeah. Or 10 minutes, whatever you want.
Canada.
There's
Oh
always
yeah,
a delay, so you're right.
yeah, from Canada. All right. Yeah, there you go then. That's it. We knew, I mean, obviously we have a lot of news we're waiting on, with all the tariffs. So just expect that this these moves are going to happen and this news is going to happen. Um, but yeah, it didn't take very long, but I mean, did kind of come down into this area right here. Let's see if it holds this area. It's a 15-minute chart, which I generally do not come down to these time frames. But it's there. But yeah, that is interesting. The US CAD is unchanged effectively, like really nothing. Yeah, I mean, not much.
Still in a range for me. Maybe we should all start investing in Vermont maple syrup instead of from Quebec.
There you go. I will say, like, just looking at the daily chart for a second, obviously we'll see in the morning when, stuff shakes out, but if the S&P puts in a lower daily high, a lower high on the daily charts, we could be looking at a little bit more of a down move here. I don't know that I would expect 43.4. That is a big demand area. We haven't really retested this small level, which comes from an hourly chart in here. So we'll see how that plays out overnight and in the morning. But it looks like on your smaller time frames, I mean, it's going down to the hour. It was 5 minutes ago. So people get freaked out, but and then it's like, oh my gosh, here we go. But look how that's holding. You know what I mean? So not overly concerned. It's going to happen. Does that 35% seem extreme? It doesn't really seem very extreme to me, but it's something. All right. Omid also had something, speaking of SPY and another group that I am trading SPX options. Someone said I've been doing SPY leaps and selling daily calls with very good success. What does that mean? So basically, that is you're buying, it's basically a diagonal spread, Omid. It's a diagonal spread.
And what are the risks of that? Because he was bragging about this, but I'm not sure. Is it a manageable type of trade to have a good return? Have you done it?
I mean, I've done diagonal spreads plenty. I will say I don't generally use like long like leaps. Do you know like for reference how far out? Like is he going out to January, March? I mean, leaps are 9 months or more.
Yeah,
So
January, I think about uh, delta of 80, I guess.
oh, he's going deep in the money. So he's basically doing a covered call, but with options. That's what it is. It's a covered call, but with all options. Instead of owning the stock, he's owning a long-term call with an 80
Less
delta.
capital employed, I guess.
For sure, less, right? So if you go to an 80 delta on the call side, you're looking at, first of all, $2 wide spread, but never mind that, right? Let's say you get in for 89 bucks, rounding it out. So you got your long call, it costs you 89 bucks. So 8,900 is the risk, which is very different risk than 55,000 if you were to just buy the shares. But you're getting pretty close to a delta of one, with defined downside risk of 8,900 all the way out to January. And so if you come in and he's selling daily calls against it, so let's say
I think daily calls out of the money uh, that he gets,
you're not,
it collects around like I would say 40 cents per contract per day. So
yeah,
yeah,
so
something like
yeah,
that.
so if you're going out here to tomorrow, for instance, and you get this 41 cent option, it's going to look like this, you know, that's what your risk profile is going to look like. Now, that's fine for the day. I mean, if you collect 40 cents, oh, let's say 250 days out of the year, I mean, you're collecting $100 in premium. If you get which is a great return overall, but what, I don't necessarily expect this to happen frequently, but you see how um, if the market does rally more than he expected, then your delta actually turns negative, which is not incredibly likely to happen in one day. But in a diagonal spread, your short call has a higher gamma than your long call. So you could get upside down in your short call delta versus your long call delta. But I mean, we're talking, the stock, if we sell at 628 calls, your neutral delta at 630, right? So, and then it becomes negative up here at 636. So the idea of that happening pretty regularly is unlikely. So, I mean, I would say, from a daily return perspective, if you expect the index to kind of stay between, 625 and 628. I mean, 3 points. I mean, the SPY can move 3 points in a day. So I would say you're definitely going to need to have a plan that if the market goes above your short call, you have to buy that back, similar to what Mark was talking about earlier. Because if your short call is in the money at expiration, you'll get assigned on those shares. And yeah, you'll still have, so now you're going to be short the shares, but you're still going to be long the call. So you're protected, but um still it's probably not his intention to get assigned on those 628 calls. But yeah, I mean it's not good premium relative to your upfront cost doing it one time, but if you do it literally every day of the trading year, yeah, I mean at the end of the year your long call is paid for, but actually that doesn't make any sense necessarily because that expires in 190 days. So if you get 40 cents times, call it 190 days, 76 bucks. I mean, it doesn't really pay for your option. So it's probably, I kind of like the way that he's selling, just in theory, he's selling a 1 day call option because what he's probably hoping for and what he needs is he needs that long call to increase in value, because if you just sell 40 cent calls all for the next 190 days, you're going to bring in $76. But if you paid 89 for the long call and that thing doesn't expire, if it expires worthless, you brought in 76, but you lost 89. So what I think he's probably hoping for and banking on is a continuous rise in the index. And so in this case, if we bought the 555 call today and we sold the 628 call tomorrow, and then the market rises a little bit, that 55.50, that 555 call is increasing in intrinsic value. And ideally, what he paid $89 for is worth a lot more than 89 by the time the option expires in January. So this selling this out of the money call means that if you can have price chase your call option up, you're collecting $76 over the course of a year, over the course of 190 days. But if you can get that 555 long call to increase in value by at least $13 over the next 190 days, then it'll be net break even at least. But that's really about it. There's really no other point to that, because you're not getting the benefit of IV rising because you've got very little extrinsic value to give you a positive impact on the 555 call. It's just basically like a stock substitute at that point. So I've heard this called a poor man's covered call before, right? I'm going to spend 8,900 instead of 55,000 and just get covered call premium. You heard that one before?
I had heard it, but I didn't know this is it. Okay.
That's pretty much it. Yeah, it's kind of it's a poor man's covered call, which it's a diagonal spread. You're buying a long-term call and selling a short-term one against it. And you probably will, over time, get a way better return selling daily call options versus going out and selling a monthly call option, because you're getting more bang for your buck on the short side selling out of the money options daily versus an out of the money option one time, 1 month. So if you were to go out to the 628s, there are no 628s. Let's look at the 630s. They're hardly paying anything. 625. So $1.67. So to my point, if you get $1.67 for the day for selling the 625s, if you sold them every day for the next 36 days, which is calendar days, so how many weekends are in there? Probably 4 weekends. So let's say it's 28 trading days, right? You'll get $46 in premium selling the daily call option. Well, if you just go out and sell the 625 1-month option, you're only going to get $12.30. So it's a much higher return selling daily or even weekly options than selling a monthly option. So he's going to get closer to his break even faster by selling the shorter term options and not have an obligation for more than the day, right? So that's a benefit. But it's just a diagonal spread using leaps and daily options. And no matter what expiration or strike you choose, you have this. This is actually, in our vertical spreads, we have a theta switch and we have a vega switch. In calendar spreads like this, a diagonal calendar spread, you actually have a delta switch, which is why you start out positive delta, but then if you let if the market moves much faster, upward, than you anticipated over that short call period of time, your delta actually will turn negative, and you'll actually start giving back your profit if the market is too bullish, right? And the only risk is the stock market falls, and whatever you paid for the long call is just, it's just that's what you paid for it, right? All right, yeah, my pleasure. All right, what else you guys got? What else you guys got? Let's see. What's the see the S&P currently trying to hold. We looked at the NASDAQ. Currently trying to hold that level off that 15-minute. So let's see. Yeah. Ain't nothing but manipulation, Ian. That's it. This ain't nothing but a little manipulation overnight. Take advantage of people's emotions, right?
At 8:30 Eastern, or this came out 8:15 Eastern, I'm 110% with you.
Yeah.
And the volume hasn't picked up in general.
No. In general. I mean,
Yeah.
a tiny bit, right?
Yeah,
Tiny
given
bit.
that now you're hitting something that's firmly in my wheelhouse. Our volume hasn't changed, man.
Yeah. I mean, it's not usual that we see even that kind of volume at this time of night. But obviously with news, it can happen any time of night. But yeah. I mean, I'm not going to try to make a prediction here, but if I wake up in the morning and I open my phone and I pull up Thinkorswim and I look at where the futures are, it actually would not surprise me to see 100% of this news brushed off and the market's higher. It wouldn't surprise
I
me.
was just going to say I want to see what the correction at 9:30 is.
It wouldn't surprise me.
Even at London, what's London going to do? But I'm not up all night tonight.
I'm not either. I like sleep. I like my sleep. All right. Questions, comments, challenges, concerns. Well, what are you drinking? How about that? I'll ask the question. I've got a silver tequila here.
Lion Distillery, Sailor's Overproof Rum, and a little grapefruit juice.
I like it. You could probably drink
Maryland local company, man.
You could probably drink that rum straight, right?
Yes. The big thing is there's nothing in it but rum. No color, no. It tastes like a lot of the cheap, like a black rum that's cheap, but who knows what the hell they put in that. This is just aged in a barrel. But you're going to pay for it.
Yeah. What do you pay for a bottle of that?
60.
I was going to probably guess 50 or 60.
For a small local company, I'd much rather support anything. And they'll deliver here and their sales. So
100%. Yeah,
and
that's great.
no state. Well, it's the People's Republic of Maryland. You know, no state tax on it because it's a local company and all that.
That's fantastic. It's amazing. Good for you, man. I love it. All right, Tex is going to run. See you next week. I'll see you on Monday in the trading room, Tex. Have a great weekend. You guys have Herman tomorrow morning for futures. You guys having fun with Herman? I mean, he's like really kind of, you guys got a lot going on in Discord. Oh, Lion Rum. Yeah, perfect. Thanks for the link. I love it.
Honestly, he seems like he's pulled in too many directions.
Herman? He's pulled in quite a few. I want to try to figure out, he's got some conflicts in his schedule doing some of the surge stuff, moving the trading room around from time to time. I want to see if surge can accommodate versus me having to accommodate.
They need to accommodate.
That's what I'm saying.
And I mean that very directly. It's a live trade room looking for trades, 9 o'clock in the morning, Eastern. You can't move that. Yeah, let's do that at 6 in the morning. What kind of crap is that? Looking for active trades.
That's the time. That's the time. So yeah, so I was thinking
ideally you want to be there 8 to 11, but that's unreasonable.
Yeah, I was thinking about that because he's had a couple of schedule changes that he threw on me to throw at you guys. And I got thrown a couple option trading rooms because I run the mentor department over there, but I got thrown a couple option trading rooms because they're running out of people to do it. But it was, yeah, no, Carl, it's 4:30 in the morning for you and I, so I'm not going to be in that room for sure. But I got thrown a couple options rooms and they were at 6 in the morning my time. And I'm like, you're out of your mind. I'm not doing it.
Yeah, they're not paying you enough.
Yeah, well, I'm not getting up at 4:45 in the morning.
Well, you put a 1 in front of whatever they're paying you, you'll get up.
Yeah, you put a 1 in front of it, and sure, of course.
My previous life, you want to put a 1 in front of what you're paying me? Yeah, I'll be there.
Yeah, I'll be there. But I was like, no, I can't do those. Can you move them till after the market closes? For options trading, you can build trades after the market closes or toward the end of the day, and kind of get in the following morning and build them
No,
out.
the FX stuff we've been doing, I can look at it now at the 3 in the morning. It doesn't matter.
Sure.
But
Yeah.
futures, come on, man.
Yeah.
You look at a 5-minute
Oh.
chart at 7 in the morning. What's the point?
Yeah. So that's on my short list of things to talk to Serge about. Say, hey, you need to accommodate. This is overlapping and it's not working.
Please reach out to well, especially me or Carl. What's up, man? Just let us know.
Yeah, man. I will. Yeah, that's on my short list. I mean, they accommodated for me, so
because he's awesome. Herman's awesome in the morning, but come on, man, you guys dragged all over the place.
too early in the morning, not good. So, no
mas.
No mas. So I can't guarantee it's going to be solved by Monday. Monday, it's also early, but it's on my short list of things to try to get accomplished, which is
some of us have not been getting the emails. Hint, hint.
I send them out. I mean, there's occasionally I'll forget to send them out, but 99% of the time I do send them out. Are you
It's not going into archive. It's not going into spam. Half the time I don't get them.
Well, now that's interesting. I'm going to stop sharing and I'm going to look at something real quick because nobody else has any questions here, Ian. Just you and I chatting. So
it's all good.
That's
Carl,
what
you still here, man?
You just chat.
Yeah, I'm here.
Here we are.
Ian, I want to double check because there's some people that for some reason I want to see if this is you.
I know there's always a delay with the Proton Mail, but they have been so incredible with spam. I'll take the 5-minute delay.
Yeah, it shows you're still at Noelia.
Yeah.
Is that right?
Yeah. What's the name of a boat a million years ago?
Is that right? Yeah, was sent. It's sent.
Okay. At least some problems on my end.
At least, somewhere. I mean, today it looked like you clicked on the link for Stocks of the Rock, so you're getting them. But I also noticed that the only ones that you clicked on were today's Stocks on the Rocks, and you have not clicked on any of the morning trading room reminders.
Haven't gotten a lot of them.
Crypto. It's weird because they're being sent.
I dug into the hyperlinks on a web page, and I just took it straight off the web page.
Definitely do that. I
mean, it's easy on a Mac. Just
yeah,
find the link and bookmark it.
Everything's easier on a Mac.
Yeah, I tried telling Ramon that. He didn't believe me.
Oh, he does now.
Hey, wait a minute. You know what mission control is, right?
Yeah.
That's his problem. He needs to set up the dock, and he needs to figure out how to use mission control to go between things.
Oh, yeah. Yeah, that's easy.
That's it.
I've
got to talk to him. He's got to fix that.
Yeah. Yeah, I don't use mission control probably often, but I don't bounce between applications all that frequently. The dock is all I use, but yeah.
Yeah, there were no emails for Monday. And I missed it because it was a 7 or 7:30 Eastern.
Now there is times where I do either not press send or forget, because it is Sunday night, and I'm looking, and I'm curious because I'm looking at was sent the options trading room, was sent the weekend trading room, yeah, that was probably on me. The one from the 7th was probably on me. That's not our mail guy. That's probably just on me. A lot of the stuff I do with this is manual, so it's not automated. Yeah, what is mission control, Greg? Are you on a Mac, Greg?
I just sent the little thing from the settings. I didn't know how to describe it.
Yeah, if you're not on a Mac, then doesn't really matter. It just basically,
With
and I
one finger, with one click or one keystroke, you can get a tiny overview of everything you got open all at once, including the dock.
yeah, what it does is it
And then
takes
just click on it.
Yeah, so if I have, you wouldn't be able to see it, but if I have, I bet you I could see it. I could share it. It's oh, and then Mark's got a question again. Unless that's an old question. Is that an old question, Mark?
Nope, nope. Brain's working overtime.
Brand new. Very good. Very
Well,
good.
go for it. That's what we're here for.
Yeah. So one quick thing here for you, Ian. I don't know. So I've got a 49-inch desktop, so it's going to look weird. I'm sharing the whole desktop now, right?
Nice.
Yeah. So what ends up happening is I've got my mission control. If I just put my cursor in the bottom left corner as a hot corner, it shows me everything.
Yeah,
And then
I've got the same. I've got the same thing.
Yeah, so it's just a hot corner. Hey, where are all my windows? Oh, I want to go back to Thinkorswim. There it is. So
yeah,
it just lets you see everything that you've got open in one big view, which is nice. All right, Mark, what you got, buddy?
With our style of trading, whether we're selling options or doing debit trades, and if we're in like 50 to 70% of the cash committed to something, how much of our account is really vulnerable to inflation and things like that?
I mean, I guess the cash portion, right?
That certainly the cash portion, yeah. But what about the rest? Is that kind of out there subject to inflation, or do we say that the in an inflationary time with the right breaks, our stuff will go up by the inflation rate?
Yeah, I mean, I think one of the best hedges to inflation is long stocks, is stock positions or option positions that take advantage of that. So the more you're invested, the better, as long as you're not over leveraged and getting yourself in a margin risk scenario.
Right.
But yeah, certainly the cash portion is at risk of, a dollar decreasing in value. And like, for instance, my Wealth Essentials accounts, best I can, I try to keep them full of positions. And I do have some buying power now, right? Because I had some positions close out, but I try to keep them fully invested because that's going to be your best inflation hedge. I would say I probably, because like in the hedge fund, we have access to portfolio margin. We do not use as much of the cash available as I would in a standard margin or a cash account, because in a portfolio margin account, I mean, we're getting easily 10-to-1 leverage on naked puts. And I will say that in March and April, when the tariff conversation first came on the table and the market dropped 20 something percent, that was, certainly not a comfortable position to be in. I mean, it was fine. We weren't at any risk of a margin call at all, but it was certainly uncomfortable, I guess, for us and investors to watch not only the portfolio value fall, but the margin increase to a point where they're just tying up more and more capital, more and more capital, more and more capital. And so obviously that led us to approach, trading from that point forward a little bit differently. We still sell naked puts. We are very mindful of the type of stocks that we sell naked puts on, of course. Stuff that we know is not going to zero, stuff that we know has a quick recovery period and has utility in the world. Not just your space, your Virgin, airlines and your Lucids and some of those types of stocks, which can be great to trade, but not great for selling naked puts on in a volatile environment like that. But yeah, so I think the best thing you can do, especially in a cash account, is to keep your positions as loaded as possible. The more you sit in cash, the more you're at risk.
Great. Yeah, that was kind of where I was on the thing, but I wanted to hear more insight on that. Thanks a lot.
Yeah, man, my pleasure. By the way, look at what's trying to happen here. It's kind of like, oh shit, tariffs. And then it drops and it's just like, oh shit, it doesn't matter. And here it goes, it's rallying again. It's so funny. So funny. That level's holding. Did I look at that on SPY? Is that where I looked at that? Forgot, because I drew a level. I don't remember where it was though. I don't think so. But yeah, it would not surprise me to wake up and see everything not just positive, but like ripping positive. Wouldn't surprise me. Now, if we got after hours VIX, I would probably be able to give more insight on that, but don't really get. I guess we get VIX futures. VIX futures. So VIX futures are up a tad. That 5 minute. Yeah, normally what I would want to see, and you can see it quite often, even on daily charts, just like intraday, you can start to see some stuff, but looks like VIX is not dropping. So we'll see how temporary this rally is, but I would say this rally that we're starting to see bounce off this, support in here might have some legs to it if the VIX had already started to drop in advance of the rally. But it looks like VIX futures are rising still a little bit and still trying to push a little bit higher on this last 5 minute candle. And then you can see the S&P dropping a little bit off its highs from that last 5 minute candle. So I'm just kind of watching for any divergences here, right? So I'm looking for, if VIX starts to fall away, and drop away, that would be a great anticipatory signal that the S&P is likely to, have some legs to it to the upside. But it's all overnight stuff, so it's not like the volume is massive. It's incredibly easy to manipulate futures in the after hours. So I don't put a ton of weight on the after hours, but yeah, it wouldn't surprise me to see this thing open.
That's a very important point. Any retail trader with a big enough account can put price where they want it, especially on a micro, wherever you want.
What are we talking? A couple $100,000 tops? You know what I mean? Like,
yeah, that's not an institutional size.
No. In fact, I'd be curious. Maybe my hedge fund could actually move it. Should we go in and try to move the market with futures? We're not going to do that.
Yeah, what a safe and thoughtful thing. I'll put my seatbelt on.
Exactly.
Helmet, knee pads, the whole 9 yards.
I would get slapped by the SEC if I started trading futures in the hedge fund. We're not allowed to do that. So it's part of the rules. So none of that.
Allowed.
What's that?
Allowed.
Yeah, we're allowed to hold 5. Yeah, we're allowed to hold 5% of the portfolio value in futures, which the notional value of an S&P futures contract right now is massive. So micros maybe, but that's not going to do anything. Micros don't drive anything, so
it's ridiculous.
Yep. So we'll watch it for the morning, but
please
you guys
keep
have
us in the
futures
loop.
trading at the normal time with Herman tomorrow, and I'm going to get on Serge and Herman to try to see what we can do to keep that from interfering with what we're doing here. What we're doing here is
please keep us in the loop. I appreciate it.
Of course, I will, Ian. Always. Like you said, put a 1 in front of it, and we'll do whatever you want. Right?
Yeah, those days are over.
Yeah, put a 1 in front of it and we'll do whatever you
Yeah,
want.
you don't call me at 2 in the morning anymore. Sorry.
Yeah, exactly. But yeah, I mean, I think there's hope because when they asked me to do options trading rooms, I was like, yeah, but you're not interrupting my day. Like they have to be after the market closes. Like Traders Army and my hedge fund comes first. You're second. When it comes to like scheduling things, you know what I mean?
But
So
that's clearly, again, something, you can, like the FX stuff we're doing, we could look at it at 3 in the morning and it wouldn't matter for us.
sure. Yeah.
But
Anything
day
probably
trading,
crypto. Yeah, day trading futures, you need to be there either in the first couple of hours or one of my friends out in Florida, it's actually one of my friend's husbands. Technically, I've known this girl since 93. Her husband is a futures day trader, big futures day trader, like institutional, like traded on the floor. Now just does it from home. He's part of a community, a little group. He won't tell me. He's like, no, I can't tell you what we're doing. Um, but he only trades the last hour of the day. That's it. They all log in on a conference call in the last hour and 15 minutes of the day. They all log in. They do what they do. I don't know how they do what they do. I don't even think they use regular charts. I think
that's apocryphal how large funds trade futures.
yeah. So I think last hour of the day
They're
is
either
really
placing an order to be executed at 9:30, or they're only looking at from 4 to 4:15. And that's it.
yeah. Yeah. So it's last hour of the day for him. So he's got the whole day free, but last hour of the day, he's like,
No, he probably turns the phone off.
no, well, not only does he turn the phone off, we were there visiting. We took the family there a couple years ago, and we were staying at their house, and it was it was 3:30, 3:45, and our kids are kids. They're kids, so they can be noisy, and my wife and his wife are Italian, so they can be noisy. And he's like, okay, he's like, time to go to work. You guys have to leave. And I was like, leave? What do you mean? He's like, leave the house. And I'm like, really? And he's like, yeah, I can't have this shit going on and all this noise. I need to focus. And so I was like, but I'm still trading. I was like, can I stick around if I'm quiet and stay down here in the kitchen and you're upstairs in your office? He's like, yeah, but I just can't hear you. You can't be distracting and all that kind of stuff. And the wives and the kids had to literally leave the house. I was like, okay. So it's pretty serious that last hour for them. But when you make $1 million, $1.5 million a
I
year.
have nothing politically correct to say other than I agree.
Yeah. Yeah. I mean, you make $1 million a year trading futures 1 hour a day, 4 to 5 days a week. I would want everybody to shut up too. Get out. This is my business. Leave. So, but he's doing stuff that I can't even imagine what he's doing. I mean, I think I might have a clue, but it's not like he's ever going to tell me. I get it. I get it. You have something special that's working and it's working better than everybody else is working. And he's not in the education business, so he has no reason to teach somebody else how to do it or tell somebody else what he's doing. In fact, it's all risk for him, right? It's all risk. So, but yeah, last hour is also a good time to trade. Makes me wonder if the last hour would be a good time to actually hold futures trading rooms now that we're talking about it, Ian. Last hour of the day. A lot of volatility in the last hour of the day.
Yeah, great minds think alike. Volatility, man. And again, that's just from spending years staring at it.
Yeah, it's actually an interesting concept, which now that I'm talking kind of through it, I'm actually wondering if I don't know, you guys can talk about it with Herman and you guys can decide to schedule. It's not me. I just kind of facilitate. But if there's ever a point where it's just like, yeah, the 9 a.m. trading room, maybe it makes sense to do 2:30 or 3 o'clock trading room, PM and just trade the last hour. Yeah, Greg, pros close, right? That's right. So it might make some sense to kind of pepper that in from time to time. And instead of doing early morning, do last hour.
A couple of us have been planning, we need to do an off the books conversation with Herman and make like a secondary, more private trading room. More aggressive.
Still on Zoom though? Still on Zoom?
Yeah,
Yeah.
more aggressive.
What do you mean more aggressive? What does that mean?
More trades with potential for scaling up.
Got it. So dealing in smaller time frames to find
Most
more
in
trades?
smaller time frames.
Okay. All right. Yeah, I'm down with that. I mean, I just like I said, I just facilitate it. You guys decide what you want to do and just let me know. I'll give you guys the space. I'll give you guys the time.
Well,
but
thank
yeah,
you for your time this evening.
Yeah, dude, it's always a pleasure, Ian. I never see you anymore. Never hear you.
That's all beautiful, babe.
All beautiful.
Don't you go changing.
I'm not changing. No, I'm not changing. But it has been a little over an hour and the questions have run dry. Now we're just chatting, which is good. I always love chatting with you guys. This is always fantastic. Right? Trading's a lonely business, so it's always good to be able to hang out with folks. So
Yes.
those of you who
Otherwise,
are
you're just
not
staring at a screen in a room by yourself, or even if you're on the beach, you're by yourself.
still by yourself. Yep. So anybody who's joining us who's not a Traders Army member, appreciate you guys hanging out. If there's anything that you guys need, let us know. If you're looking at becoming a Traders Army member, let me just do this. I'll throw it in the chat box. Trader 60. I'll actually, I was going to put it here, text note. Trader 60 will get you 60%, no, not 50, 60% off your first month pro membership. That's not how you spell membership. Come on. Right? So there it is. My one shameless plug of every 2 weeks. So yeah, check it out. It'd be fun. Be fun to have you. And it's casual, but we're serious. You know what I mean? We're casual, but we're very serious about what we do. So you want to be a part of a community that doesn't sugarcoat shit, and we try to make money, and we do everything we can to support everybody in the community. Then
And there should be something here for pretty much everybody.
Pretty much everybody. I mean, you guys are now doing Forex. We don't have a Forex course, but you guys are doing Forex trading with Herman in the futures and crypto rooms. So he's kind of combined futures, Forex, and crypto kind of all in the same. So he's kind of taken it upon himself to kind of modify that. But yeah, retirement stuff, option stuff, stock stuff, crypto stuff. I mean, you name it, we do it. So yeah, something for everybody. So check it out. Mike, it's good to see you. Patel, haven't seen you in a little while. Nope, he just dropped off. There we are. Mike Gibson, good to see you. Fine, everybody. Let's go do our Thursday evening. I will see you guys in the options trading room on Monday. Have a great weekend. Let us know if you need anything. Support at TradersArmy.com. Always a pleasure. And yeah, let's have the music take us out, shall we? Be good. Bye, y'all.